Federal Reserve's minutes from its September 16th to 17th meeting. Mike, what are the key headlines?
Well, the minutes say that almost all of the participants, which is Fed speak for all but one, supported a quarter-point cut at this September meeting. Stephen Myron, of course, the new governor, was the only one who wanted a half-point cut. But the minutes do suggest there were some more hawkish views. A few participants stated there was merit in keeping the federal Fed funds rate unchanged at this meeting, the minutes say, or they could have supported such a decision. And most participants emphasized upside risks to their outlook for inflation in the discussion about the economy. Much of that discussion revolving around inflation, with the hawks noting progress towards the Fed's 2% target had stalled, which raised the risks of inflation expectations rising. The weakening of the labor markets carried the day, however, officials indicating their outlooks for the labor market were uncertain, and they viewed downside risks to employment as having increased. They cited a number of indicators, including low hiring and firing rates, concentrated job gains in a small number of sectors, and increases in unemployment for groups that are traditionally showing greater sensitivity to the weakening economy, including African Americans and young people. There were a range of views, the minutes say, about the degree to which the current stance of monetary policy was restrictive and about the future path of policy. Most participants judging that it would likely be appropriate to ease policy further over the course of the year, but some noting by several measures financial conditions suggested monetary policy may not be particularly restrictive, which suggested a cautious path ahead. There was a brief discussion of the balance sheet, but reserves continued to appear abundant, the participants felt, and no changes were suggested. So the minutes kind of tell a story of a divided Fed. And that's what we got basically in the dot plot, with almost even division between further cuts and some people wanting just one and some none.
So clearly a divided Fed here. And of course, we have a Fed meeting coming up later this month here. And the dual mandate still remains paramount here: maximum employment and stabilization of prices. Where do you think the Fed should really be focusing on right now?
Well, you have a real division on Wall Street about that. A number of economists are pointing to the inflation figures that we have seen lately and suggesting that we have not yet seen the worst of the tariff pass-through into inflation and prices, and that is something to be concerned about. Others are still concerned about the weakening of the labor market and the idea that suggests a weakening of the economy ahead. But there's also a division in terms of labor on whether this is a supply problem because the administration has deported so many people who aren't now going to be able to take jobs, or a demand problem with companies seeing the economy slowing and not wanting to produce as much. The bottom line is the Fed would like to have a lot more data to give it a clue as to which way we're going this month, but they don't have it right now. So the tough thing is going to be using alternative indicators to figure out where they are and what that might be telling them they should do.
Mike, you mentioned that there was just some mention of the balance sheet. It seems like this is becoming a hotter topic of late, with market participants hoping for some more guidance on this. Why is that? Why is this rearing its head right now?
Well, we're getting to the point, Scarlett, where market participants in the money markets are suggesting that we're getting to the level of Fed funds reserves that are at the borderline for whether or not they are where there's enough available. We did see a 1 basis point jump in the effective Fed funds rate recently, and some people were pointing to that as a sign that this is coming. So the question is, when do they stop QT? When do they stop their overall reduction in the balance sheet? And it doesn't appear that on the 16th and 17th they were ready to do that. They still felt reserves were abundant enough, but it does suggest the fact that they brought it up, that they're getting closer to the decision point.